Hey everybody, Allison here with our free daily video update. Today I'm taking a look at Netflix based on the weekly time frame. I like what we are starting to see so far on this symbol on a weekly time frame, and I like the fact that earnings has already occurred, so we don't have to worry about that with our trade in the future. So what I like about this weekly chart is the fact that, first of all, the price is holding the simple moving averages as support. Prior to this, they were holding as resistance. We recently crossed above them, and this week we're confirming that they're holding. I also liked the fact that Bollinger Bands are flaring open, so they're expecting a continuation to the upside. We have momentum crossing above the zero line, continuing to form green bars with plenty of room to continue to the top of the axis, so this is also a bullish sign here. The ATR trailing stop, which are these dots, these red and blue dots. The red dots are resistance, the blue dots are support. And if we go into the close this week, switching from resistance to support, this is usually a nice bullish sign to see on a weekly time frame. Now, every now and then, it will show more consolidation. Back here, for example, when we saw the switch from resistance to support, we saw a slight move higher, but overall the price kind of chopped around here and then dropped back down. Other times, though, and more often, you will see it lead into a bullish trend. So let's just take this back to a 10-year time frame really quick. And we'll zoom in and take a look. So back here, for example, we saw a switch from resistance to support and saw an excellent move from around 126 up to 423, our all-time high. Back here, we also saw a switch from resistance to support and saw a move from 62 up to around 130. Here we saw a switch from resistance to support. Now this one was a little bit more consolidation, but we technically saw a move from 64 up to $69, $70, so not a bad move. To the upside, not as strong though as some of the other ones. Here we saw resistance switch to support and saw a move from 10 up to about $64, $65. So you can see the majority of the time it goes into a bullish trend, and every now and then it might chop around. But when I pair this with the fact that Bollinger Bands are flaring open, with us recently turning our moving averages back into support, and finally with us trying to print a bullish divergent bar for this week, that is an excellent sign that we will see a follow through within the next 3 bars, and because this is a weekly time frame, the next 3 weeks, of some sort of higher high. Now we do need confirmation tomorrow into the close that 1, we are switching the ATR trailing stop from resistance to support, and 2, that we are going to print in a bullish divergent bar. So far, it looks very likely, but what I would do is still wait until the last probably hour going into the close of market to confirm that this is still what this weekly chart is looking like. And if we still have the bullish divergent bar, if we're still printing support from resistance for this week, that to me is a sign to look at going long. One thing that helps us out on the daily chart is the fact that we are in an overall bullish trend. As I mentioned, earnings has already occurred. On the daily chart as well, Bollinger Bands are flaring open. We tested this week and held support and are bouncing up. Momentum, though it is pulling back some, is still above the zero line, so there's still overall bullish strength. And then, of course, we have a nice daily squeeze, which if we are in to anticipate this squeeze firing one direction or the other, right now, I would be looking for it to move to the upside to stay with the trend. So because of that, I would still base this trade off the weekly chart, but I would go ahead and look at a long debit call vertical spread as my strategy. Now I want to give myself time for this to work out. On divergent bar trades, it usually works out for a move within 3 bars. So with a bullish divergent bar, we're looking for a higher high within the next 3 weeks. So 1, 2, 3 weeks would be February 14th. I think I'd prefer to give myself just a little bit extra time into the February monthly, just so that if it does happen within the 3rd week, theta decay hasn't eaten me up necessarily on this trade. We'll also be protected from theta decay, of course, by it being a long debit call vertical spread. So the short strike will help offset the long strike some. Here, the 347.50, 352.50 is a 232 cost basis, 268 profit potential. So excellent risk versus reward. It's already $2.10 in the money, so the majority of this trade so far is intrinsic value, and it wouldn't take much of a move in Netflix in order for it to get to break even, let alone an overall profit. If you prefer a strike with better open interest, so a little bit more liquidity for this monthly expiration, you could go with the 350, 355, 50 strikes. It's a 213 cost basis, 287 profit potential, so a little bit lighter on the risk, but keep in mind this is also completely out of the money, so it doesn't hold any intrinsic value yet, and it does require Netflix to see a stronger move to the upside in order to get to break even or profit. Now, I still think 355 is very tangible to see within the next 3 weeks time frame, especially when it seems like we've had prior resistance levels on a weekly chart right around this 375 range. So that's clearly a nice target to the upside to see on a weekly chart, and either one of those spreads would be completely in the money if we did see a test up to that level within the next 3 weeks. So that's it for me today, guys. Thanks so much for joining me. I hope you have a great rest of your day. As always, may the trade be with you, and I'll talk to you next time. Bye.